Welcome to the Snapshot edition of the Daily Video Update. This is being prepared Tuesday, April 19th, where I'll briefly discuss the action in the market today and then see how things look for Wednesday, April 20th. And it was a really strong day. It was kind of one of those days that seemed to come out of nowhere. And usually the things that have been taking the markets lower, well, the stock market just kind of ignored that and said, hey, we're just going to jump in and buy anyway. And then that kind of fed upon itself. Other people saw that happening and saw, oh, here's maybe a buy the dip opportunity. So they jumped in. People that have been short on the market, they started losing money or really tying into their profits that they've been seeing. So they had to get out. And when they get out, they have to buy. So that pushes prices even higher. It ended up being a really positive day. It didn't really change much other than it wore off our short-term oversold condition. So when we opened, looked like we had kind of a flat open, but then boom, right off the bat, saw a nice green bar come in for the first 10 minutes. It went down a little bit, then shot a little bit back up. Well, the buying just kept going, and we were able to get above R1. Then eventually we got above R2. And then as the day went on, we never did get to R3. That was kind of too high up for us to get to, at least on Tuesday. We ended up going up to the 44.50 level, then we made 44.60, then 44.70, and then we just came back down slightly off of 44.70. We closed slightly off the high. There was a little bit of selling going into the close, but we ended up being up 1.61%. Volume did increase, but it was still below average. Now, as far as our technicals, yeah, they wore off some of the short-term oversold condition, but they're still negative overall. The markets are still fixated on inflation and interest rates and then all the different geopolitical concerns that are happening. So the technicals still remain negative. Was this just an oversold bounce from a short-term condition? Is that just to wear off some of the indicators that we were seeing? Or can this continue? We were able to regain a few moving averages, such as the 200-day exponential and the 50-period simple. The 50-period simple is kind of the most important one. And usually some of the news and things that were coming out, that would take stocks lower, but it didn't happen. And that just goes more to the scenario that I teach in my classes, that usually the market will lead the news. Now, I know that sounds so strange. There are times when things happen and the market reacts to that. You can't deny that. But there are other times when the market's going to do what it wants to do, and then it just uses some kind of news event to justify why it's going higher or lower. So that's why we follow price the most. There were some earnings reports that weren't overly exciting. There were some people from the Fed speaking at different areas, and one person in particular who's a voting member said that they expect rates to be at 3.5% by the end of the year. That could have just totally freaked out the market, but it didn't. And even though we saw this negative backdrop, interest rates continued to rise, but growth stocks went up anyway. So that's just one of those things that happens sometimes. That's why the market has its own logic behind things. And oil actually ended up declining for the day. And the dollar index is above 100 and continues to climb. So we're seeing a lot of strength with that. The economic report that came out were that housing starts and building permits, they came in better than expected. That's not a real market mover, but the market could have picked up on that and freaked out. It didn't. Our trend is still that we're in a trendless environment. The ADX continues to drop. With the update, our bias is now switched back to positive, where our momentum still continues to be negative. And this just shows where we've been overall, where we were at the bottom of this range after Monday. Well, now we just shot back up to the top of this range. You could say it's positive because now we're slightly above the daily pivot, but we're right back within the price range that we've been in for the last number of trading days. Looking down below, you can see where volume did pick up from Monday's pace, but it is still below the moving average line that I have plotted here. Here's our ADX, where it continues to drop. It's below 20. we're seeing a decrease in the red line and a pickup in the green line. And as these two are getting closer together, that's why we're not getting a high reading with the ADX. And we'll have to see if there's any follow through that can happen. Our spaghetti tree is just a mess. We recaptured a few of the moving averages, but there's still some moving averages above where we're at right now. I wanted to bring this back up because I look more at the 100-day moving averages when we're in a sideways environment where the exponential moving average, you could suggest that offered some overhead resistance. But we did close, again, as I said earlier, just slightly above the pivot. Our rainbow is looking kind of messy right now. And I have other rainbow charts that I may bring up from time to time. We are still in a long-term downtrend because even with the advance on Tuesday, we are still below the moving average overall. Here's where the dollar has just been climbing. It got above 100 and is still continuing to go. And then this is the relationship that we've been watching as interest rates are going up, but we're seeing tech really decline. So what's our outlook then for Tuesday? Our technicals are negative, and we have to ask the question, can the bounce continue? Or was this just a one-day wonder to wear off that oversold condition before we get set to go lower? Or are we just going to continue to tread sideways? Not trend, but tread. The markets remain in a trendless intermediate term range where we've been pretty much since the beginning of the year. There's the daily back and forth between growth and value. The markets are fixated on interest rates and oil. Supply chain issues also continue to be part of the overall scenario. The economic reports coming out on Wednesday are more real estate related. We have existing home sales and then the weekly MBA mortgage applications index coming out. Not real big. The existing home sales, it can if it's a really weird number. But the mortgage application, that's a weekly report that comes out. And then all the different geopolitical events, Russia, Ukraine, things going on in China and the supply chain issues, inflation concerns, interest rates going up, oil prices all over the place. And any one of these can come to the forefront at any given time. So what are our scenarios? For the market to keep going down from here, if interest rates still continue to go up, that has been posing a problem for stocks as well as inflation fears. Both of those things together could send things lower. And there's earnings that are coming out, and sometimes they can drive a sector, which can then bleed over into the overall market because our technicals do remain negative. So that is the scenario that we're looking at as the most likely, other than number 3. Which is where we're in a sideways market right now because our ADX is below 20 and going sideways. What can we look at for scenario number 2? Well, we still have that positive backdrop after yield curves reinvert. We did have a short-term oversold bounce that we saw, but can this continue? That's the big question now. And as we're moving throughout the day, different moving averages and pivot points may provide support if we're falling or resistance if we are climbing. So what's our conclusion? The S&P is negative still. In the short term, it's negative and is just looking like it bounced from being oversold. Intermediate term is also negative because all of our oscillators and we're below most of the moving averages. That's negative overall, but we did regain the 50-period simple moving average and the 200-day exponential moving average. But then long-term, we're still negative because we continue to be below the 200-day simple moving average. Here's a list of some of the other videos that you are more than welcome to check out. So thank you for watching this Snapshot edition. If you want to watch the full-blown analysis, please go and watch the daily video. And I'll prepare the next Snapshot video after Wednesday's session.